Welcome back to Power Breakfast on CNBC TV18. Let us now shift focus to some important earnings. And pharma major Dr. Reddy's fourth quarter earnings missed street expectations. Ekta is now joining in with the earnings fine print. Ekta, tell us how the numbers were.
Well, for Dr. Reddy's this quarter, it was definitely a mixed quarter because the reported numbers were weaker than estimates, but the adjusted numbers were largely in line. So the reported revenue was up around 12.5% on a year-on-year basis. The adjusted revenue for non-core brand divestment was in line with estimates with a growth of around 17%. EBITDA came in at around 1,872 crores, which translated into a margin of around 26.4%, which was lower than estimates of around 27 to 28%. What probably disappointed the street a little bit is the US sales, because that came in at around $391 million versus estimates which were wide at around $350 to $412 million. So it came in, it did not hit that $400 million mark, which is probably a little bit of a disappointment and was lower on a sequential basis. India was down 12% year-on-year, but adjusted for the divestment of the non-core business, it was in line with a growth of around 11%. Russia was down 4% year-on-year and down 15% Q-on-Q, but that was mainly due to the currency concerns. I think the US business is probably going to weigh a little bit on the Dr. Reddy's numbers today, but overall a mixed performance on the reported numbers, but on an adjusted basis, it was largely in line except for the margin miss.
Ekta, thanks a lot for sharing the earnings fine print. And in fact, we'll have the management of Dr. Reddy's joining in today at 8:35 a.m. to discuss the fourth quarter earnings, the outlook, and a lot more. So do stay tuned to CNBC TV18 for that conversation.